So what is this big golden monkey about? What is this? Is this just some PR stunt? I
I,
mean,
I think some PR stunt. So yeah. So obviously it was in the news, and I'm just not sure how the Alibaba people in Hangzhou make of this.
I don't know. Maybe it is a prank. Maybe it is the Shopee people who
Hey,
are
hey,
actually,
hey,
yeah.
hey, Andrew, what do you make of that monkey?
I think someone thought like just like everything Lazada does, right? Honestly, at this point, Lazada feels like an episode of The Office. like, like, I think someone's just like, you know what,
Chinese
boss? You
office.
know what? We should put a monkey on the outside because monkey Shopee. Let's put it outside, but below the Lazada logo. And the boss like, yes, that's a great idea. You go and execute that. And then now the
Wait,
monkey looks like it's taking the building down, right? It's like Shopee monkey taking Lazada building down.
hello, barbarians, and welcome to episode 12B. For anyone outside the Sinosphere or who was influenced by the Sinosphere, episode 14 of the LLB podcast, Low Level Barbarians. From Asia on Asia with debate and discussion on trending topics. With us, usually the man of the high ground, Dave Chang. He is currently finding high ground and going to the Everest base camp, so we'll have to catch his takes on a separate episode. With us, Jangan, the information super connector, sending us information about monkeys climbing on the Lazada HQ today. Very interesting news that we can't really figure out. How are you, Jangan?
Good.
You look a little bit tired.
Yep. It's been like that for a few months, but yeah, I'm good.
Okay, and then
Coffee.
with us, Andrew G, the master debater. As you can see, he's back in a prison cell in Malaysia.
Finally, back. Now I've got to escape again.
All right, so let's just jump in. First topic. Everyone seems to be talking about it. Andrew, for the short term, for now, gets to take a victory lap. Go to IPO. The prices have sustained the initial IPO to a degree, better so than Grab. Grab's initial debut in the Nasdaq back in a few months ago, right, was it dropped 20% or 21% on the first day. GoTo's price was very stable up until recently, where it's dropped about 18% across the few weeks that it IPO'd from April 11th till now, which is now April 26th. So that's the question is, what is going on with the price? Will it sustain? What do you think is happening? Does anyone have any hot takes first? Or if not, I could maybe give some thoughts.
Go for it, Alex. You should launch.
Well, I mean, for me, when I was thinking about like, how could we explain, stock prices, especially in the short term, which are not always very meaningful. There's a lot to kind of understand, but I guess I could give my framework of how I was thinking about it, and I was looking right away to volume and liquidity, right? And I think if any meaningful stock price movement, real clear signals are accompanied with very strong volume, which is typically well above the average, right? So before we dive into it, I think that's something that we can consider to look at. I'll probably compare something about Grab in the volume movements versus their price versus GoTo, what we've been seeing. Aside from that, I think primarily what we have been seeing is a difference of lockup periods in regions. So I had to dig into this, right? So I don't know what the securities regulation is called in Indonesia, like the BAPE PAM or something kept coming up. I don't know. Let's just call it the Securities Exchange Commission. But it is actually mandated in securities law that anyone who has acquired shares 6 months before the registration date, which I'm assuming would be April 11th for GoTo, uh, below or at the IPO price, will be locked up for 8 months, right? So, whereas you contrast this to the Grab IPO or the Nasdaq, there are actually no official securities law that say you need a lockup, but in fact, it's mandated from the investment banks, lawyers, or the actual, company itself, just as a default, right? And that's typically anywhere from 90 days to 180 days. So, kind of what we're seeing is that uh, anyone who is subjected to this are probably the biggest shareholders, early investors, right? Which would be like VCs, employees, angel investors. And the only people who are not actually locked into this for the Indonesia Stock Exchange are actually municipal governments, and also certain banking restructuring agencies tied to the shares, right? So any movement we're seeing is retail or a combination of maybe government unloading stocks, right? So I think it was very interesting to see that, on the first day, there was some class of shares for Grab on their IPO that allowed a 21% drop, whereas I think maybe there was much stricter lockups for Indonesia, right? Um, and you could even see, though, after Grab's initial 20% drop, it was quite consistent for a few weeks around like the $6 to $9 range, right? And then only on March 28th, 175 million shares were traded on a down day on March 28th, which is before that the average was roughly 20 to 30 million shares a day. And that was significantly, I don't know, some class of shares, like in a big way, were allowed to probably sell before the lockup period. And then on March 3rd, exactly 90 days, 160 million shares against the 20, 30 million average were traded down further to the current prices we're seeing around $2 to $3, right? So it was very clear to me. I didn't look into the S1 filings. You could look into the S1 filings if you want to find the exact lockup terms or whatever, but it was clear to me that there was a 90-day lockup for Grab shares. And then that coincided with the quarterly results, right? So with GoTo, it seems to be a lot bigger float, or there's a lot more liquidity, because on the IPO day there were 9 billion shares traded, whereas Grab, we're only talking, to the 30 to 100 million shares range, right? So there's a lot more shares, there's a lot more liquidity on the Grab GoTo
But in
IPO.
terms of value, it's nowhere close, huh? Because it's 338
Of course, yeah,
rupiah per share, 9 billion shares versus $11 per share for the initial trading price, right? Times 6 billion.
yeah,
It's
correct,
massive.
yeah. So I mean, yeah, it could just be a representation that there's more value being traded from the share price, right? But it's been trading, after the 9 billion shares that were traded on the initial IPO, it's been in the 3 to 4 billion range, with the exception of April 20th and April 22nd, where there were down days of 5 to 6 billion shares. So it's very meaningful movements down, but still overall, it's still at very close to its IPO market cap valuation, right? But it's still too early, right? If you have an 8-month lockup, the next 2 quarters are super critical of whether this maintains, or it gets adjusted mark to market to whatever revenue is coming in, whatever GMV is coming in, whatever profitability is coming in the next 2 quarters, or I guess 2.5 quarters, because 8 months, right? So I think it's very interesting that it could be a combination that it's just still early lockup periods. Quarterly performance are going to matter a lot. I would look to the volume, if any movements are happening. It's either that, or fundamentally people are just holding. Maybe your thesis, Andrew, from if everyone wants to catch Andrew's, we talked about this on his thoughts about GoTo, a few weeks ago on the Master Debater episode. It could be you're right. Maybe these people believe that this is just exposure to Indonesia and they're holding, right? So, and if the quarterly results are strong, people will continue to hold. So, if not, I don't know. What do you guys think? Do you think this is going to sustain post lockup? Do you think that there's enough institutional money, government money holding retail? There's enough Indonesian retail investors that really believe like this is my way of life. Whereas then Grab has to compete to chip away that market share, right? Because they only raised 1.1 billion. That signals a lot, right? Are they going to be profitable soon? Is that what it means? Or they don't need as much money? Because Grab has a much bigger war chest, of course, spread across more countries. So I don't know. Andrew, what do you think?
So I actually am going to be the wet blanket this time around, I think.
Ooh.
Yeah. So my take is actually they're not doing so well. Like if you look at the stock price, it's dropped a lot in the last few weeks, right? Like the launch price was somewhere close
Yeah.
to 380 rupiah per share. Now it's trading at closer to 320, 310, right?
Yeah.
And if you look at the volume, I could be wrong. I need to look into the data a bit better. It sounds like companies doing buybacks, right, to sustain the price of the stock, right? So if you look at the volume changes over the last few days, a lot of them it looks like purchasing from the company to stabilize the share price and just try to maintain the stock price, which means they're burning cash. They're burning cash to keep the stock price steady, right? What I understand is they're currently they have a green shoe option, right? And the broker's being a stabilizer for. I'm not sure who's the broker, but I knew in the beginning that they were planning to do this. I'm not sure how long they're planning to do this.
Andrew,
But typically with the
do you want to explain green shoe to the audience? Yeah.
I mean, basically, there's a fixed price that you want to maintain for the overall price of the stock, and you purchase prices to try to sustain the price of the stock while presumably taking your cash balance off, right, to sustain the price. So you're essentially increasing your share in the company at a price that may not be what the market wants to. But typically, there is a max cap that they will allow the broker to buy. And I think in their case, it's somewhere around the ballpark of 6 billion shares, right? Now, if you do that
Yeah.
and you hit the cap, you have no choice but to allow it to slide. And I think now it's already slid to where it is right now with the green shoe option. If they remove that off the table, it's probably going to slide further. So I actually don't think it's very positive. I think you're going to see a decline in the next few weeks.
Okay. Jangan.
Yeah, I think that there was quite a bit of discussion about the green shoe option by the underwriters which were trying to sustain the price. But if you look at, I mean, the size of GoTo of its current valuation versus the total market size of Indonesia Stock Exchange (IDX), I think at the day of IPO it's like 9%. I took a look at I mean how index funds in Indonesia are structured, and apparently that many of them are just tracking exactly the composition of IDX as a whole. So which means institutions who invest in index in Indonesia would have to would allocate,
Allocate.
and of course, I mean, we heard some people talking about sort of underweight or whatever, but when you do underweight, if you start from zero, you have to you still have to basically add something into your portfolio. So so I think overall, so when Grab went for IPO, I think there was quite a bit of debate of whether the value was too much. But when GoTo went for IPO, I mean, if you talk to any informed investor, they will tell you that okay, this valuation is too much, and
Yeah.
there's no way fundamentally it can be sustained. But of course, people do not know um, how the rules play out for large tech stocks in IDX, because that was the first one. I mean, Bukalapak is comparable, is much smaller. So and probably in the
Mm,
market there isn't much sort of float there for you to borrow to short,
correct.
and I think facing this uncertainty, I mean, people probably didn't want to short because you never know what will happen in the short.
You you can't short in Indonesia. I checked it out. I don't. It's they banned it in
Oh, the
2020.
ban in
You can't
2020.
actually find a
Okay.
way to. So there's no. Yeah. So there's like no such thing as a short squeeze where you're going to see prices, people trying to cover
Mm,
shorts. Like actual, I saw like in the prices recently in the past week there was a
mm,
pop up, in price, and I thought maybe it was short squeezes where short covers are covering for
mm.
profits, but it's just people actually positioning in, I guess.
Interesting.
So it could be like what you just maybe they're
Yeah.
allocators or this kind of stuff. I mean, like this. I mean, this could lead to your credits to your theory, Andrew, where if this is the only option for a monster country in the region that's going to be a huge percentage of the world population and a contribution of output going forward, it. I mean, this is still very frontier stuff, right? So I don't know. Like, it's hard to compare for Grab because they're sitting in U.S. with much more mature markets
Yeah.
and maybe investors who don't know much about Southeast Asia. But if it's institutional money here who's there for the long haul, maybe this represents a new premium that is quite normal that we see of loss-making companies that list on the Nasdaq, but command higher, multiples, right?
Yeah.
So I don't
Uh,
know
so
if
just
it's
two quick
possible or
comments
still
there, right? So
early.
I'm not sure, first of all, that you can actually short GoTo. Someone correct me if I'm wrong.
You
You
can't.
can't, right? Yeah, yeah,
You can't.
because yeah, it's
It's illegal.
exactly, exactly. So in that sense, like you don't really have a risk of a short squeeze.
Yeah, correct.
So
Yeah. So if any upward movements that you kind of saw were actually people positioning in them,
Hmm.
right? It has to be people actually buying it in substantial amounts relative to, again, you could check relative to the volume, right? So
yeah, um, yeah, I don't know. I mean, there's multiple ways that could happen, right? If you have a stabilization, so if the broker's buying to try to get it back to the upward price, but the trades have to happen, you may see a slight upward correction by 10-15% above the price, right? But you can't get much beyond that.
yeah.
Yeah.
So to clarify, what you guys were saying is it's the brokers who are like have a deal with the company to try and maintain the price
Yeah,
until like a
okay,
period after
let me do
shutdown.
a better explanation. So basically, when you have an IPO, you can choose to have a green shoe option, and that basically means that the broker tries to stabilize the price after the deal starts, right? The broker can
Yeah.
buy from existing shareholders, or buy from the company if the company is also an existing shareholder, and the job is to
Yeah.
keep that price stable. Typically, they'll buy it, from the open market, um, but you can also buy it back from the company. And there's a maximum cap that they're willing to invest to get to that. Typically, in terms of like total number of shares that can be paid for.
Yeah.
Um,
Well, I'm assuming this is with market making liquidity activities off their own balance sheet of the broker, right? Is that what it is?
Correct. In this case, it's really hard to say, right? GoTo itself could be
Yeah.
paying for it.
But okay, but that so what? They take the IPO money and pay back a certain percentage
They take
for maintaining a price.
correct balance sheet money to maintain the price. Yeah, it's
Yeah, I mean, I guess someone could act if
yeah.
yeah.
A lot of companies
Go
do
ahead.
that, right? In very illiquid markets like Malaysia, you
Yeah.
find like the largest companies in Malaysia all do it.
Okay. Yeah, I can believe that. Yeah.
So
I mean, that's kind of wild if that's the case because that's not really capital efficient at all, right?
But
So
honestly, that's the way the stock market works. If you look at even the US, stock buybacks is how a lot of companies, like what a lot of companies do with their profits. It's like ridiculous, right?
well, after operating a profitable machine, right? Is not usually after IPO, or I mean, I
No,
don't know.
no, continuous. Like you see old companies doing this.
So,
Yeah.
so basically, we have a consensus that that whatever we have seen is a number of the technical factors which are sort of sustaining the price for the first
Yeah,
few days, and of course now we are
correct.
starting to see a slide, and I think as of today it has dropped cumulatively about 18 to 19% for an IPO price.
Yeah,
So of course, I mean, people are going to watch very closely the next few quarters, the results, and the competition is still fierce. So yeah,
yeah.
so it's.
Well, we also do you guys know the comparable numbers relative to Grab's performance? Because it seems like it'd be somewhat of a closest comparable in terms of region and size, even though it's different markets. So, I mean, I would expect GoTo to perform very similarly to Grab in the next. Well, I guess in this case it's longer. Grab had a 3-month lockup, what I'm guessing, right? Then it tanked all the way to its close to book value, or maybe there's a slight premium now. I would imagine GoTo does the same thing across a longer lockup period. That's all. You won't see it because they can't. There's no actual selling pressure, but sentimental and psychology wise, towards the end of that lockup period, you're going to see that happening probably. So I don't know. My guess is the comparable is that it will also tank in a similar way. To relative to the financial performance, which would be, I think, it's not too far from Grabs. Or am I wrong there?
Jangan, you should go.
Yeah, do you know the numbers? I don't know the numbers of GoTo, so I haven't looked
I,
that closely.
I have a colleague who actually went through the 900 plus pages of GoTo's prospectus, and she wrote actually a memo that's still on my desk. I haven't got a chance to read because
You could forward us a memo, man, or we could kick it around for the next episode.
honestly, I didn't spend too much time on this per se because we sort of know that everything is driven by technical factors
That's
for the
true.
last few
Yeah,
days.
yeah,
So we
that's
can
true.
spend lots of time trying to analyze, trying to get to the details of how exactly things are doing, but
Yeah,
fundamentally we know this is valuation that
you're
yeah
correct.
yeah
Correct.
that in a free market that can't be sustained. So the question is that okay, what's going to happen next? And of course we are also in this macro uncertainties which add to the volatility. So the question is
Yeah,
what's going to happen
yeah,
next, and what's going to be the impact on the other companies which are trying to go for IPO. I mean,
yeah,
you have a bunch of companies which are at like ridiculous valuations. I mean, Zendit, Ajaib, etc., etc. I mean, what's going to happen to them?
yeah. Yeah, I mean, it's a very good point. Like, I mean, like I almost feel that this might be too esoteric for the audience because this is kind of like work that hedge fund people do to trying to figure out a trade, right? You're trying to understand a certain amount of timing and technical factors, and you're trying to time it so that you can make a profit off a movement, right? So, but fundamentally, it's no different than probably what we've talked about in the past of, performance valuation of big tech companies in the region.
Alex,
So, with that in case, maybe we can
Alex,
jump to
let me ask you
what?
a question. I mean, I think it's about like 10 years ago that you jumped from a hedge fund to building company emerging markets in Southeast Asia. I mean, compare these two experiences. Would
Yeah.
you say that you would have been better stayed in a hedge fund?
I no no I was very much a macro
Mm,
technical guy. I felt that the past 10 years helps me come full circle, especially if I'm going into like the equity space or understanding a company. Like what I realized, like what a hedge fund guy from a PE guy to what a VC does, we're all in the same coin, just different parts of it or different sides of it.
mm,
Right. If you're executing as a founder, you're on the other side. If you're an investor, you're just different areas of the coin, but it's the same coin. right? So I think being operating for 10 plus years, trying to build from big scale to trying to bootstrap and failing terribly, that, it really just makes you a better investor overall. So I think if I go back to like a hedge fund or PE kind of structure, it just adds more value over time. So yeah, I don't think I would. I don't know. Maybe I could have been a decent hedge fund guy. Who knows? But that's long gone. That ship has
Yeah,
sailed.
well, lots of things could have been said if we chose different paths at different points of our lives. But let's not go there. Let's
Wouldn't
move
have to do
forward.
this podcast every
Yeah.
2 weeks.
Yeah, well, I wouldn't be doing this podcast. It would be about hedge funds instead.
Yeah.
Well, speaking of large tech companies that don't perform well, next topic is Zilingo, SEA's own Theranos, I guess you could say. Um, Earlier in April, the CEO of the fashion startup Zilingo, Ankiti Bose, how do you say it?
Jose.
You
Bose,
speak Bengali.
was suspended, right? Zilingo is a B2B technology platform that powers global apparel supply chain with innovative solutions for production and sourcing and trade. That's taken off the website. I have no clue what that means. Zhangyan and I have a mutual friend who works directly in Shenzhen in supply chain and fashion to a degree, and he tried using their platform many years ago, and also couldn't understand what they do. He couldn't find value out of it. I think they make a lot of their money from initially was from helping small merchants scale, and then they have this like a SaaS platform that try to charge, and there's also a marketplace where they take a cut of. But apparently, they were trying to raise money about 150 to 200 million earlier in April with Goldman Sachs Group. And then some of the investors started questioning some of their accounting practices, which led to audits from their existing investors, which was Temasek and Sequoia, which led to the CEO, Ankita Bose, being suspended. And currently, a few days ago, are currently talking about fully replacing her. Right. So, and I guess the initial topic that Jangan wanted to talk about was, governance, and how does this happen? And we did mention other companies in the past that we did a whole episode on companies that might be like this. So I guess it's just coming to head again. I think a lot of things we said in the past episode still are relevant now, but maybe there's some more things we could embellish upon, especially in the context of Zilingo. And I think previously, when we had Dave, man of the high ground here, Jangan, I think even Andrew, like everyone has some friends who either invested or quite close to the situation. So maybe we have shied away from it, but now that it's officially in the news, maybe we get some more deeper insights. So Jangan, what is your take of what's happening with Zilingo? What's going on? How did we even get here? And is this like the first of many to come, or do you think this is just a one-off thing? And in general, we've been in a good environment and with good practice, or what do we need to change to maybe get there?
I think in the region, there are lots of companies where you are a little bit sort of skeptical whether the business model will work. And typically what we
Yeah.
would do is that we try to educate ourselves. Right? We try to talk to different people. Maybe there's something that's missing that we don't see. The question about Zilingo is that, honestly, I've seen their decks for multiple rounds. I've seen lots of documents that they've sent to investors. I just couldn't figure out what exactly the business model is. I actually have a version which
that was gonna be my question
I
to
actually
you.
have a version in front of me that was published. I don't know, it's not labeled, so I don't know which year that was. So basically, the tagline says that our platform unlocks value across the entire supply chain through 6 businesses. Which are the 6 businesses? First, B2C marketplace called Zilingo. Second, B2B marketplace called
Yeah.
ZilingoAsiaMall.com. Third, private label as a service called Label by Zilingo. Fourth, a seller tool called e-post and inventory management tool called Zseller. Fifth, a trend forecasting tool called Ztrends. Sixth, fintech, which has an interesting logo
Oh my god, the
with
loans.
letter FC in it,
Yeah.
and basically the numbers that we're talking about is that, okay, 1 million plus monthly active users, 2 million plus products available, 9 million GMV, $9 million GMV per month, etc., access to 11,000 unique long-tail merchants. I think for those of you in the audience who have looked at or invested in Zilingo at different stages, you probably recognize these numbers, and you probably be able to reconcile which period this deck was created. But essentially, the problem I have is that many years ago, okay, let me detour a little bit. A few years ago, 2016, 2017, I was in Dubai for a while, and I was actually advising a Chinese cross-border e-commerce company that was active in the Middle East. So it was interesting for me to actually look into their operations. I mean, how they plug in the supply chain, how they run the marketing, how they figure out the fulfillment issues, the inventory issues, the payment issues, etc., along the way. And and my biggest feeling at that time was that it was incredibly difficult to get the supply chain to act coherently. So there was another company that some of the investors were looking at that moment, and almost everybody was saying that, hey, this company is not going to make it because it was very
Yeah.
slow. And guess what company that was? It's a
What
company
I
called
don't know.
Shein, Shein. So so
Oh.
so so so
Well.
so everyone
Okay.
was saying
Okay.
that, okay, the founder doesn't spend time to grow the business. He spends so much time sort of dealing with the factories, trying to figure out, how to make some minute improvements, which probably do not matter at that point of time.
Mm,
Fast forward a
mm.
few years, and many of the companies, that cross-border e-commerce companies that has a strong supply chain element, are not sustaining because there's so many issues with the supply chain that they couldn't figure out. I mean, the ERP, the processes. I mean, how do they pay
Mm,
all the suppliers on
mm, mm,
time, and
mm,
how do
mm,
they
mm.
sort of order sort of small volumes to test the market, but still have the confidence of the factories that they are going to make small
Okay.
volumes,
Okay.
etc., etc. I mean, these are the things that Shein
Yeah.
has figured out quite well. Then I think by chance I was in Bandung, Indonesia. I was talking to some of my friends who were sort of running textile factories in that area. And my profound sense is that the supply chain in Southeast Asia is not as efficiently organized as the supply chain in China. So basically, if you create this business, I mean, you can argue both ways, right? You can argue that, okay, there's a bigger opportunity because the supply chain is not as well organized, but you can also argue on the flip side of the coin is that for you to make the supply chain efficient in Southeast Asia, you need to operate in a much more efficient way compared to your counterparts in China. So they look at Zilingo's team, look at the way they're pitching their business, look at the way they organize their product, etc. And that doesn't give you confidence that they can crack the whole supply chain and make it efficient and as a result reap some value from it.
Well, wait. So Zilingo, their pitch was to be. I mean, essentially, from what you said, what I understand is that there is a lot of pain point and friction and value that can be
Yeah.
created, right? And I think Shein actually manifested that, right? So it's a bunch of minute optimizations that add up to a big picture, but he focused it into a vertical of fashion e-commerce where you can reap a lot of value by making those micro. It's just an optimization, right? That's the play. And I guess, yeah, if you're not a good storyteller back then, it seems crazy. But so in theory, like, I think what Zilingo is trying to do the same thing, but for Southeast Asia. Because my understanding was that if you're trying to build a Zilingo, and I was talking to my Rajan about this, who's based in Shenzhen, and he's like, China has all the infrastructure. Yes, there's a bunch of smaller players, like in Vietnam, and Sri Lanka or other places, but there's no way, like, if you're trying to build this kind of ecosystem or to solve the problems in the space, that you can ignore China. So are you trying to say that when Zilingo was pitching, that this was purely a Southeast Asian play and it didn't really, like, all this, like, optimizations for Southeast Asia was supposed to be
I
like a unicorn?
I
Or
mean,
Did they not start in India?
sorry, go ahead.
that's what I thought.
What did you say?
He said that did they start in India?
I'm not sure exactly where they started, but the story I've seen of that particular year was definitely a Southeast Asia focused story, and I think later on they went to the US as well, right?
Yeah.
Which I would think that
Correct. Yeah.
it's as much as a way to develop a more lucrative market because Shein makes a huge in the US, and also to tell
Yeah.
investor a much bigger story. But my problem is that, I mean, if you look at the supply chain itself, I mean, if you try to make the supply chain more efficient, instead of just being a pure marketplace, you need a lot of refined operations. You need to be very efficient in many different things to make it work. And I don't think that,
Well,
I mean, it's easy to do that. So they probably need to be more efficient than the companies in China.
I, I don't even think that though. I think it's that they just needed to focus on one part of the stack, right? It's so fragmented, and it's just not an easy problem to solve. I think why Shein works is because they optimize it just for themselves. This is like kind of like an ecosystem play that I think you have to go further down the stack, focus on one thing that make it really works, and then try the next vertical that connects to
Guys,
it.
the
Like you just,
fundamental
it's
basis of
just
Shein and Zilingo are very different, right? So let's
yeah,
get some
yeah,
context here. So Shein is about this idea that people want fast fashion, and fast fashion needs are so different that if you could create a way to combine just-in-time manufacturing with moving dynamics of trends, and create a
yeah.
feedback loop where influencers. So they okay. Let's go to the genesis of this. There was a startup called Rune, RUHN in China, that was all about creating brands around influencers. You have an influencer who posts up a video in Douyin, and then like
Yeah.
they have a specific product they're wearing. That product sales would go up on Alibaba, right? Sorry,
Okay.
on Taobao. And so after seeing that connection between what influencers were able to do, this company Rune said, hey, what if we could create a way where we create that product, we go to the influencer markets that product, and then we manufacture that product to meet needs based on that influencer's views, right? So if we could speed up that process of manufacturing versus content production, you would have this amazing machine down here. Shein kind of capitalized on that idea. They were like, instead of just using influencers, what are some other ways that we could do? And if you think about it, they're one of the largest advertisers on TikTok right now, right? Globally, right? Is Shein. Shein's growth parallels the growth of TikTok in Western markets so closely that it's really just like taking what Rune and did with its relationship with Taobao and Douyin, and it's like basically amplified that in a ridiculous way. So Shein is combination really knowing well how to do content marketing to teens on fast social feeds,
That's not shit.
right? Compile that with just-in-time manufacturing, and then be able to feedback and
Mm.
optimize across
Yeah.
the value
Right.
chain in such a way that you have really low margins. And so in that way, it's very different. When people compare Shein to Zara, like Shein is completely dwarfing Uniqlo, it's dwarfing H&M, and it's like soon to catch up to Zara, right? Like it will be the largest manufacturer of fast
Yeah.
fashion in like 2 to 3 years time. So it's a very different beast from these guys, but it's also very different from Zilingo. Like they're not even the same ballpark. Zilingo started because these guys went to Bangkok. They saw so it's a story very similar to what Shopee does today, right? Basically, they saw what we today call Instagram sellers, but back then were just like small, medium
True.
shop
Yes. Correct.
operators
Small
in
merchants. Yeah.
Indonesia, in Bangkok, in Vietnam, selling like fashion apparel out of their stores. And they were like, hey, there's this bottom slash mid market that's outside of fast fashion. If we could capture these guys and put them on a platform, we could do something, right? Problem is fashion is really really hard. Trends change, everybody has all kinds of different products. Zilingo also, if I'm not wrong, also ended up doing retail. They bought stuff and they were selling stuff, and retail in fashion is just painful because like there's a huge amount of inventory risk. When trends change, people suddenly don't want to buy stuff. If seasonality changes or Raya is over, suddenly you have all this inventory that you don't know what to do about, right? So as a result, Zilingo had like lots of issues with this stuff. And typically, what businesses try to do then is they're like, hey, can we optimize the bottom of the funnel, right? And it's what Alibaba calls B2B2C, right? So you've got the B2C front end. What can you optimize on the B2B side by either reducing cost of logistics, streamlining order management? If you could like bucket multiple orders together and make one big order, and then the marketplace merchants all have it, you would then have like price synergies or reduction in cost of logistics and supply chain, right? So Zilingo was trying to do that
Yeah.
stuff. The problem is they were trying to do this in a market where, like predominantly Indonesia, but also in the other markets, where Shopee, Tokopedia, and Bukalapak and these others were like throwing money down, getting mostly the same groups of consumers, except there's multi-category, right? And then trying to recruit
Yeah.
what we now call as Instagram sellers, right? Who predominantly do all their trades on WhatsApp and Instagram. So Zilingo's market base starts to diminish. The consumer base acquisition cost starts to become more expensive for them because they're focused on purely fashion, whereas Shopee and Tokopedia are all like multi-category, right? And so if you think about it, there's no way you can justify um, the baseline assumptions of growing a business like that in a market that's this competitive, unless you have a real differentiator, and in which case they didn't. I'm not saying Zilingo's business model isn't going to make sense, like, and this is like a pure winner takes all. I think what happened was they were trying to get $1 billion valuation to be a unicorn, and in that process, they did some fudging. That's what I understand from like the crisis, and like this rush to be a unicorn and meant doing some funky accounting stuff, and then Temasek just like called a red flag, right? I don't know what the details are. I don't know. I don't have any goss. Yeah,
Well,
yeah.
what is their main business model? I still can't grasp it because initially that's the genesis. Like to
I
me, the
think
genesis sounds the same. It's not too far off from Shein, right? It's
no,
just that
They
they
don't
went
do
off and
anything with
did this whole
manufacturing. They don't
ecosystem
do the
play,
actual
play
manufacturing.
versus
They don't like. It's basically
it's a marketplace.
it's a
It's a
marketplace, and they
marketplace.
help the merchants import from China. But I don't know where they monetize. I think they monetize purely from commissions on the front end. I don't think they
but
monetize on the back end.
Oh no, they don't have to take a cut.
but if you look at
I don't know.
if you look at the manufacturing per se, right? Andrew, you mentioned that they're working a lot with the Instagram sellers who have their own designs, and these are the guys who probably can't produce, I don't know, 10,000 pieces of a particular sort of SKU or particular design easily. And if you look at number of manufacturers that Shein is working with, I can't remember exact numbers, but it's not that many. It's probably in the lower hundreds. Yeah.
Well, my whole take on this, and it could be wrong, is that the genesis was very similar where they're trying to help these small merchants scale, but they just went off and did too many things without focus, right? And then of course you raise too much money that's very shallow, then you really don't have clarity of what to do, and it just leads you trying to do everything, and it's just you become a jack of all trades and you didn't actually create any value. Like my friend actually tried a few years ago putting a very significant order for a big PO
Mm.
onto it. There was just no liquidity in the marketplace. Like they had like their own team trying to go in between the two people, and then there was a few communications and it dropped, and we're talking like a significant PO in the millions, right? So it's just it was not here nor there. And then I guess what happens is it's easier to lie, then you end up trying to fudge numbers. Like that will come up in the court if there's any criminality or whatever. It's just it's again, we shouldn't fault people. Like we might be overly negative sometimes. It's okay to fail and to try,
I,
but
I,
like it does seem this is pointing in a much more
I think
nefarious way, I guess.
Alex. I mean, so we will try to analyze things like this, right? I mean, things blow up. I think one thing which is always important is to
Yeah.
understand the psyche of the person in that seat, right? So in Chinese we have a saying
Yeah.
called "peng which is means that okay, you basically brought someone to really high position, and
Yeah.
they dump the person in the free fall because the thing is that I mean if you look at some of these companies and Theranos or whatever, so the market investors, I mean whoever who in the ecosystem were giving them lots of applause that I mean and in a
Yep.
way
Yep.
makes the founder stuck in a situation where I mean if things don't work, what do you do? I mean fake it until you make it. I mean if it still doesn't work, what do
Yeah.
you do? I mean I think the same mentality as those we usually call what rogue traders. I mean if you make a big loss, what do you do?
Oh yeah.
You
You double
definitely
down. Yeah.
you try to cover it, and they probably work extra hard to make things work. I mean, all this all these new businesses which were added to that will probably attempt to say that okay, I mean, one particular business is not that big. Okay, let's add on to that. I mean, if you can crack this code collectively, it's going to be a massive market, and it's going to make sense suddenly. So, but the problem is that,
Yeah.
and precisely as I said in the beginning, right? I mean, it's just so much friction in the market in each of these aspects, and I'm not saying that it's impossible for them to compete against Shopee, Tokopedia, or whatever, but for them to do that effectively, they need to be much more efficient, which which I think, given the talent base they're able to tap into, given the experience they're able to sort of leverage, it's a very difficult job.
I'm just looking at their site, and like their worldwide site is actually really different. Huh? Like it's purely like it seems
B2C.
like they have three solutions. Yeah, so they have basically three solutions that they're pushing, right? So one is they do sourcing, so it's B2B sourcing of products directly from markets where textiles are famous in. And then it's optimizing factory operations, which I did not know they had. That's pretty cool. It seems like, like it's similar to what like inventory management solutions do, but more than that, it's looking at like defect rates, reject rates, processing, modules for basically factory management. I don't know if they developed that in-house or M&A, but it's kind of impressive that they have that. So it's like cutting, sewing, finishing, packing, like end-to-end management. And then they've got the like omni-channel e-commerce and inventory management solution, right, with marketing, etc. It's pretty cool. It's like end-to-end management for all apparel management.
So,
Um,
so basically, it's a very, very, very tough job to crack and do it well, in a way. I mean, if you look at
yeah,
all
but
this
they
business
have a
stuff.
very clear target market, right? It's basically anyone who's in the fashion business, um, end to end, all the way from manufacturing, and they provide basically the tech, the intelligence to do that. At least that's what the worldwide site looks like it is on.
And
Maybe,
I
maybe
think that's
were they
hard.
trying to pivot out of the marketplace because like sell on Zilingo is like
I think
pretty
so.
yeah.
I think so. It seems like if you look at what you read old in the news versus now and what you see on the website, the product, yeah, I think it wasn't working. They're trying to get away from it. But like it for that to work, man, you have to go straight to China, man. That's where all the manufacturing sits, and
I
if
don't
you
know,
want to do
man. Textiles,
fashion,
India, Bangladesh, Nepal, the South Indian
raw
connection is strong.
materials, but the manufacturing will happen in China, man. It's
No
just
lah,
No,
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 no, no.
manufacturing. No, 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 no.
Textile, not true. Textile, not true. Manufacturing for fashion, not true. I mean, even like Patagonia, North Face, all these outdoor brands still do it in Vietnam, Myanmar, Malaysia. Um, Nike produces in Malaysia. If you look at H&M, Uniqlo, it's all like Nepal, Bangladesh, right? Because textile is like massive in South India.
But Andrew, I mean, if you want to, if you, I mean, if you do fast fashion, if you want things to be highly responsive, especially in e-commerce manner that Shein is doing, and you probably need to do it in China. So, the uncle of a primary school classmate of mine runs a sort of a textile manufacturer in my hometown. I visited him a few times last few years. So he started by taking orders from Walmart. So he remember those days, right? I
oh
mean,
wow,
one order came in through a trading
yeah.
company, 50,000 pieces of T-shirt at one go, and very, very
Interesting.
thin margin. And I think
Yeah,
about 2013, 2014, he said I could no longer do Walmart orders because the salary cost, the
too
environmental inspection cost,
yeah.
everything adds together doesn't make money anymore. So then
Same in Vietnam now.
then companies like Shein came into the picture. They said that okay, so we are going to make it much more efficient, and you are able to produce small quantity of things if it works, and you can provide large quantities, and what we do is that we make sure you get paid always on time. So this kind of
Mm.
things helped his company survive, but manufacturing in a massive scale, I mean, for large sort of Western brands in China, I think now it's a very difficult game. But that in a way
Yeah.
pushes all these manufacturers to work with e-commerce platforms because otherwise they can't survive.
It's true. I mean, there's still a lot of old world industries that this could be applied to. Probably, like it's just we're seeing it happen in fashion first. Um,
But
let's not go deeper in this, guys. Though,
but sorry, just one word. I mean, everybody I've
last one, last
yeah,
comment.
everybody I've known who has gone deep into the supply chain will tell you that it's very, very difficult to crack supply chain.
Yeah, so I'm not too sure about our conclusions there, but let's move on to the next topic. Netflix, first time in a decade, lost 200,000 subscribers, and it gave further guidance in the next year to lose another 2 million subscribers. The stock has plunged significantly. Right, I haven't checked the actual numbers, but it lost something like what, like 50 billion in market cap, like with it across a few days or in a day. I don't know the exact number, but um, I think social media has said it all already, right? Like they're now in they're trying to solve this problem, right? They're talking about throwing ads into the mix. They're going to do advertising now, which is something they said they wouldn't do. We don't know if that means it's going to be in the free tier, like in a lower tier for lower cost, or is just going to go into the everyone's going to see ads now. People are shouting on to the roof that they're all going to cancel if this happens. Has Netflix gotten too big for its own good? Is it too bloated? Do you think they can refocus? What should they refocus on? What does this look like in the face of further competition with strong IP like Disney Plus or even Apple Plus, HBO, etc.? What do you guys think is Netflix is solution to all this?
So I just have something funny to chime in before we get into the difficult part of the conversation. I saw a
Yeah.
meme this morning of like Netflix grabbing uTorrent and throwing it out, and then like behind Netflix came Disney Plus, HBO Go, you know, all these different
Yeah.
Paramount and all the different streaming solutions, right? And then Netflix looks a bit worried, and in the back, uTorrent's back again. It's
Which
just
look, that meme really encompasses what everyone's saying in the conversation, right? Like the reason why we do Netflix because it's convenient. As soon as you make it not convenient, they will go back to pirating, and it's so easy to pirate these days. With the
yeah,
technology we have.
yeah.
So
I think just to call out, there's a couple of interesting things about this, and before I even like get into the topic of Netflix, like just Meta, it's really interesting how a company can be perceived as just like, wow, they did it so well, it's so smart, that strategy is great, and then 5 years later, we're like, what idiots? How did they not see this coming, right? Like when
yeah,
Shopee's when C's share price was flying, we were like, yeah, oh my god, it's so smart, entering Latin America and Europe, and they figured it all out. They're so clever,
yes,
man. And then now it's just like trading at a third of the price that it was trading a year ago. We're like, yeah, actually, maybe not so smart, eh? Right? And so
2020
like
hindsight.
Netflix is the same thing, right? Like the last 10 years we've been saying, man, Ted Sarandos and his crew, like with just producing original content, like just not playing the game all these other players are playing, so
Yeah,
clever, right? And just like billion-dollar deals to produce original content is the smartest way you can run a streaming business, right? And so it seemed like the story was over. Someone cracked streaming, right? But then you
yeah,
take, for example, I just signed up to Disney Hotstar in Malaysia last week. I've been here a week. I signed up to Disney Hotstar. You know why I signed up? It's 18 ringgit a month. It's
yeah,
18 ringgit a month, right? That's 6 USD, 5 USD a month, right? Netflix costs 40 ringgit a month. That's 10 USD a month. Doesn't seem like a massive difference, but for the average,
oh, for
Malaysian,
Malaysian,
that's a
yeah, for
massive
sure.
difference, right? And if you
Yeah,
consider that cable TV, Astro in Malaysia costs, anywhere between 100 to 200 ringgit a month, like basically $25 to $200. That's why Astro's share price is just getting a killing as well, right? So
yeah,
cable TV is dead. Netflix came up with a super expensive product. Why? Because they have to justify high FTE costs, basically people costs in LA. They've got to justify marketing costs. They've got to justify the production cost of these things, right? Like,
yeah,
you know, and therefore they just ended up having like a huge cost base that they couldn't sustain. They went international, and they tried to get international people to pay for the price of something that's manufactured out of the US. It's going to be really difficult to get that to happen. So it's not surprising. Like and then what happened was, in the last year, you suddenly have this resurgence of like HBO Go is appearing in all these like
yeah,
emerging markets. Disney Plus is appearing in all these emerging markets. Local players are producing, their own apps, right? So Indonesia has like three or four different other leading apps now with their local content. Korean apps are spreading globally, and so the space for content is becoming really competitive at price points way below what Netflix is charging. So ultimately, they had a product that is too expensive in each of these markets. And I don't know the details, but I'm pretty sure if you looked at the number, subscriber loss is probably coming out of emerging markets. And or even if it's across the board, like since a lot of these services are also based out of the US, not surprising that people are shifting between different service providers, right? The average
yeah,
American now has 2 to 3 streaming services at a time, right? And if you're an Apple user, you have Apple TV as well.
yep,
So it just becomes really complex, right? And then you need a layer on top to even like disintermediate between them and figure out which content you're going to watch. And so I think right now what's happened is they've got to question a lot of things, right? So baseline, how do you reduce your cost, right? Are you going to like? Wouldn't be surprised if there's massive layoffs. And then on top of that, you've got to figure out how do you reduce content production costs. And then Netflix doesn't have anything special anymore because they don't have any special licensing rights. Um, and then you basically have growing revenues. You have a bunch of different options, right? You either try to grow your subscription base by trying to cheapen the product, or supplement revenues with an alternative product like ads, or you start to find high watchability products that have licensing. They can't really
yeah,
play with any of the real studios, which means there's a possibility Netflix may play the sports game, right? Which for a long time they said they never will. But like, I wouldn't be surprised if they sign a massive sports licensing deal just to get like DAU up, right? Then you get
Yeah.
DAU up, you figure out how to monitor. So ultimately, there's a multi-pronged strategy they need to think about, right? For the domestic market, which is strongest in the US and possibly Europe, how do you keep strength there? And that's possibly increasing DAO, right? And increasing DAO will increase stickiness, and therefore you can possibly increase like how much people are willing to pay for the product. And then in other markets, they've got to figure out how to introduce a lower tier, and if that means sustaining it with pricing or subsidizing via growth in the developed markets, that could be the strategy, right? And then the last bit is just like figuring out what they're going to do in content production because that's massively
Yeah.
expensive for them, and it's hard to justify.
I mean, if I'm to kind of simplify what you say, and what I kind of understood of the situation was that Netflix just never really left user acquisition mode, right? They were just canceling, a lot of content people loved. They never really focused on the retention piece where, which is essentially in this business, it's just really good fucking content at the end of the day, right? Stuff that people want to watch. And, if it keeps getting cheaper and cheaper, yes, there's, you're trying to fill the void of general TV. There is that element, but, long-term stickiness is the content that people want. And they've just been too focused on trying to acquire. And I think maybe that's just a tipping point, maybe now this is just a natural size of where it is. And with competition, that gets even harder to balance, though. They can't just rely on a monopoly anymore. So it
But
just
also,
sounds like,
competition is stellar, right? If you think about like
yeah,
Disney Plus,
way smaller.
yeah, no,
They have
it's
all
also
the good IP.
stellar, as in like the content they have on it, the IP, the watchability of it. Like, I mean, and the production quality is really good, and they figured out how to basically monetize universes of content with strong amounts of synergy, right?
Yeah,
Like, I'm on Facebook, I'm seeing all these like reviews about Moon Knight, and it
yeah,
sounds like they figured out a machine with the Marvel Cinematic Universe. They figured out a machine with the Star Wars universe. They figured out a
yeah.
machine with Pixar, and they've
It,
just like they're
it's
focused. They're very focused.
good that a subpar product, it doesn't really matter, like, because I feel like Netflix has a better streaming service product, not the content, right? Just like the platform technology itself is so much better. But Disney, like, we don't actually have Disney Plus. They have a lot of weird pockets of licensing agreements around the world. So we have Disney Hotstar, right? So it's not as fluid as an experience as Netflix, but it's just they have better IP content. That's what matters fundamentally for the business for the long term, I think. And I think that's what Netflix kind of lost. Jangan, you were trying to say something?
No, that was more of a question because for a long time, Andrew, you mentioned that for a long time people were saying that okay, Netflix strategy is so smart, and one thing they were doing is that they were trying to monopolize the content, right, or monopolize people's screen time. So in the sense that you only have, I don't know, 12 hours a day that you can watch TV every day, and
Yeah, correct.
and they're going to stuff you with enough content that you want to watch, or you don't mind zapping around, so that you don't have time for other stuff. So the question, I mean, and because of that, they have invested in a lot of content. I mean, if you look at lots of Netflix originals, and even to this day, I think bulk of the content will just cater to a very small audience, and you will never reach mainstream appeal. So the question is that, does it make sense for them to produce so much content? Uh, was that a
Yeah,
strategy to catch up with the inventory that a player like Disney or HBO would have because they have been producing
yeah,
content for decades? And having a lot of content, having that perceived sort of efficiency in capital or cost of capital, does that make any difference versus, I mean, if you look at HD produce nowhere as much content as Netflix, but they have a few shows that sort of must watch, right? I mean, people will tell each other to subscribe because they want to watch this show. You
yep,
used to have
yeah.
that in Netflix a lot, but I have a sense. I mean, I might be wrong. It's just maybe it's what they have been recommending to me, but it seems that the shows they have now are sort of becoming a little bit, I don't know, less edgy.
Well, I think it's on purpose. I think what you're describing was their strategy just to replace like TV, which again, I think it was smart. I don't think that changes, but it's just that there's a different dynamic in the market now. Like you're not gonna always watch like high quality, intense, like focused drama or I don't know, just or like the best like series out there. In between, you want to watch something mindless too, right? So there is a kind of that niche to fill or void to fill, or it's really not a niche, right? It's just
Mm,
you're filling a massive void of general TV.
mm,
So cheap content does work, but you also have to mix it in with good content too, which is why people will subscribe to multiple things, right? So at the end of the day, like if they want to be more relevant, they still need to go have that like high hitting, high impact kind of shows too, mixed in with their general TV. So it's getting better balance
Yeah,
against,
I don't know. So I think one thing Netflix has shown is that actually I don't know if local content matters as much as international content that's unique and interesting, right? Look at the success of Squid
yeah.
Game. Look at the success of Casa del Papel, right? There's been like a bunch of hits that have become. Sorry. Oh, there's been a bunch of hits. Yeah, it was not clear what this means. Like that meant something very different in the boys' schools I went to. So I think like they've proven. I mean, for example, I don't know if this show actually exists, but I saw a trailer a few months ago of a Nigerian girl who meets an Indian Bollywood boy love story, and it's produced in
No.
collaboration between Netflix India and Netflix Nigeria, which is impressive, right? Like
Two of the largest film places in the world, actually.
exactly. So that's
Yeah.
kind of cool. I got to find that trailer. But I guess the point I'm trying to make is they've proven this very interesting model of internationalization, which is actually happening globally right now. And um, the idea of creating purely local content, I'm not sure how much of that is required because if you can make like one Squid Game may be
Yeah.
better than 10 Malaysian shows that are not transferable.
We're gonna probably have I recently met the general manager of iQIYI, the streaming platform from China in Malaysia in the past month, and he has a whole take on this. I think we'll have to call him on for a special episode, but like he wants to talk about streaming. The iQIYI is focusing on local production content, and they have a very good niche of Chinese users here in Southeast Asia. So I mean, and their strategy is to create content. So, but I think we could probably continue that discussion for another day. Any final thoughts before we move on?
Uh, Alex, it's interesting you brought up iQIYI. iQIYI is, I mean, I have a colleague who used to work for there actually. It's a company
Yeah.
in China that has, I don't know, been in a very sustainable way, not being able to make any profit. So for a long time,
Oh,
and
really? I thought they were quite massive in China.
they're massive, but I mean, I think when they went for IPO in 2018, the price was $15, and because people had so much sort of confidence in China's version of Netflix, and
Netflix.
I think about 3 months later, it went up to $40. And guess what's the price now?
One,
Three,
two,
three,
three. Not
three.
so far
So,
off.
so, so
I
80,
isn't
80% down from the listing price,
isn't that just like the age old story of like Chinese companies failing to internationalize well?
no, no,
Like,
no,
is
no,
this
no,
is this like a wrong
no.
stereotype
They're
or?
failing in China. They're,
Oh, they're failing in China too.
they're,
They're just failing across the board. Yeah.
Definitely in China
Okay.
because the production cost keeps going up, and as Andrew mentioned, right, there's lots of overhead, etc., etc. And also, I'm not sure whether that applies to Netflix, but in China, there's one issue when you deal with production houses, when you deal with content, when you deal with actors, is corruption. It's very difficult to stamp that out, and as a result,
Well,
lots of money went
yeah.
into efficiency.
But what is the Netflix of China then?
Don't think there's a Netflix of China. I mean,
There has to be because the two largest film markets in the world, or like say if you're going to create media in the space of, TV shows or movies, you're either going to US or you're going to China,
first
right? These are like the largest places.
First, people in China go to cinemas, and not so much this month, especially in Shanghai. But people go to cinema a lot. If you look at the box office in China, the performance is phenomenal. And second,
Yeah.
you've heard of this thing called TikTok?
Well, they don't. Do they put full feature movies on TikTok? Well, I
No,
wouldn't be
but
surprised if that's the
no,
future.
but this is where people spend their
Entertainment,
entertainment
yeah.
time, right?
Okay.
Because you can say that okay, full length is different from short videos, but if a person is glued to short videos and afterwards they will start saying that okay, why? My time is so fragmented and so busy in life. I don't have time for full length series. So why would I keep my subscription for iQIYI or whatever?
All right, let's move on. We'll have a separate episode for the streaming wars and content. I think there's a lot we could go off that. But last topic. Well, the news changed today, huh? Elon Musk actually was successful and acquired Twitter. Before this was just a general discussion on Twitter and what was going on, but I think Elon Musk closed the deal. The board approved it of something around $54 a share or something. Jack Dorsey's making a cool billion. There's a lot of people who are making a lot of money off of this. There's a lot of angles to this, right? There's the Elon Musk angle. There's the free speech angle. There was the angle we were talking about. Why isn't Twitter as big as it is in Asia? Before we get into it, though, I'll give you some numbers. Though it's more just not as small as you think. US is the largest in terms of users for Twitter with 77 million users. Japan is at 59 million users. India is 24 million users. Brazil is 19. Fifth rank is Indonesia, 18 million users. So the fifth largest user base in the world comes from Indonesia. Thailand is ranked number 10 at 11 million users. Malaysia is ranked number 19 at 4 million. It made the list of top 20 users. So Philippines is also up there. Philippines is ranked 12, I think. It's close to Thailand users around 10 million or
Hold
so.
on.
So
How many users in Indonesia? 11.
no, 18.
18. So that's less than 10% of Facebook.
Yeah, so like there's a few ways you can interpret that.
Yeah.
Like this could this be a mass platform where there's huge user growth potential? Is that what the right play is? Or
I think
are you supposed to just focus on the product, make it more sticky, and then you capitalize on existing user base? But like people in Asia do use Twitter, not as much as the US or Japan, but like they're still using it in a significant way,
I think
at least for a small percentage of the population.
I think it would be interesting to look at Twitter Facebook user ratio in different countries if we can see any meaningful difference.
Well, that's the other interesting thing is that I think for like my hypothesis is that our generation uses Instagram, the generation above us uses Facebook, and so that user base will be declining. The younger generation uses like TikTok and other things, right? So I don't know like if Twitter fits into this for Southeast Asia, and then how it will be used, right? It's in the US is used as the tiny percentage of influence, and it dictates a conversation, and people cancel off Twitter, all these kind of things. They're that small percentage of people are addicted to it, and the rest just follow it, right?
So
But it's very different here, so I don't know.
So question for Andrew, as the marketing guru, I mean, how much online performance marketing budget you would allocate to Twitter?
Close to zero.
Or have you?
Close to zero. Okay. Why?
But let's talk about this. All right. Let's like I think we're
Hey, your
we're-
sound.
Oh. Is it working now? All right,
Yeah.
Yeah,
got
it's
you.
better. Yeah.
Better. Yeah.
Got you. Perfect. Always put the long thing in front of your mouth. Okay. So first of all, like Jangan, that's a separate topic. As an ad engine, they've done terrible, but we can talk about the details after this. First of all, what is Twitter and what is the role that it plays, right? I think
No.
Twitter's like the public townhouse, right? It's where people go to talk about what's happening at that very day. Like I realize when there's something big happening, right? If like there's a celebrity who's died, or there's like an earthquake somewhere, or there's like Mexican elections happening, and I just want to know what's happening, I get to Twitter or Reddit, right? But Reddit is a bit difficult
Correct.
because like your feed is a bit messy, right? Whereas Twitter, hashtag, you immediately are seeing all the news, right? If there's a protest in Hong Kong, Twitter's for the news. So Twitter's almost done the equivalent of the first 2 pages of a newspaper in the 1990s, right? It's got a very different role from what other social media channels play, right? Instagram you go to because you want to. Again, Instagram 10 years ago, you went to because you wanted to see cool images from your friends and some images from like photographers and other influencers. Today, you go there to see a bad ripoff of TikTok, right? Because they've just made Reels take over the whole feed. I hate it. But anyways, that's Instagram. Facebook, on the other hand, is like a weird portmanteau of Twitter plus Instagram plus TikTok plus Twitter. Right? It's like all of them. It's like you get news from CNN, then you get your best friend in primary school's cat, and then you get a forwarded message that your mom thought was cool to post from WhatsApp onto Facebook, and it's like a Christian prayer, right? And they're all in like one newsfeed. Facebook is just like completely irrelevant at this point, and they're potentially just acquiring enough users to replace the people leaving. But I think like usage rates are going down. Now, so what does that mean for Twitter? I think it has a very clear role to play. In US politics, for example, it's where you go to get information about what's happening. Politicians are pretty active on it. Donald Trump was a massive user of it. When there's M&As, when there's interesting movement happening within markets, people go there for that news, right? And that's picked up in some markets more than others. I think there's a huge global potential for Twitter to be the public square for multiple countries, multiple organizations, multiple when I say organizations, I don't mean corporations. I also just mean like, for example, what a lot of people don't know is like on the K fan, like the K-pop fan community is really, really strong on Twitter, right? So like there's like
That's
I
true.
mean I feel really old here. What's the word for K-pop fans? K fans? K K
K-pop fans.
Move on, please.
No, there's like a proper Twitter name for this. Holy shit. This is
Oh,
showing
okay.
my age.
I don't know. I'm far out of the Twitter circles for K-pop, so
And Yeah, let's go with K-pop fans. But there's actually so K-pop Twitter is a thing, right? It's like a massive community on Twitter. And so there's like all these like weird and like LGBT community. There's all like specific kinds of hashtags and
Crypto
keywords
bros.
to use. Crypto bros are massive on Twitter. There's all these like. So I think Twitter is actually like this really cool like public news feed of what's happening among the communities you're the most interested in a very relevant like quick way. But
Yeah.
actually, like, there's three places where that happens, right? There's Twitter, there's Reddit, and there's Discord. If you think about it, Discord is more like
Yeah.
private
Correct.
rooms where people have conversation and you can have little forums.
Yeah.
So it's almost like Slack for communities. Twitter,
Yeah.
Reddit is more like permanent forums for communities, and then Twitter
Yeah.
is like
It's
quick
front page.
bite-sized headlines from communities. So each tree is community management platforms for special interests, but just like
Yeah.
the chronology factor and the format of how that information is passed out is just very different, right? So I do think it has a massive role to play, right? So, in
Yeah.
effect, what he's doing is this: he's buying the most urgent headline producing company in the world, right? And this is like a
Yeah.
really interesting play because this is Elon Musk's moment to become Rupert Murdoch, right? If you think about it, if you think about it, journalism is dying in the sense like traditional pillared publications are just like disappearing. If you want to be relevant now, your post has to
Yeah.
really perform well on one of the social media channels. If not, nobody cares about that news, right? And so there's a lot of ways Twitter can be used because if you envision the future of news, Twitter really is it. Twitter
Yeah.
really is the future of news, right? And somebody who's smart enough to see that, acquire it, and figure out how to use it. And if you figure out like news doesn't just come from like official publications, it comes from the mouth of Trump itself, it comes from the mouth of Musk, etc. It's
Yeah.
removing the disintermediation of the journalist, right? So it becomes its own way of publication. And the difference, right, when I said communities between Discord, Reddit, and Twitter is on Twitter, authorities are very clear, right?
Yeah.
Those authorities don't
Yeah.
really
Yeah.
exist on Twitter or on Discord or Reddit. So in effect, he's buying the ultimate mouthpiece that connects like authorities directly to consumers of that information, right? Whether they're celebrities,
Mm.
politicians, business people, companies, etc. Right? Now, so I think this is his Rupert Murdoch moment. Now, in terms of what he has to do with the company, it's a 10,000 person company with massive operating costs, right?
7,000.
Seven.
So it's much smaller than all the other. It's actually a very lean company relative to other
Not lean, dude.
companies.
7,000 for the kind of operating profits they have.
Look, it could, yeah. So you could cut even more. I agree. But I mean, like relative to other
I
tech
think it has
companies.
to be crazy drastic. I think it has to
Yeah.
be crazy drastic. So I think the three things he's got to do is, first of all, like be very clear on the mission and the strategy because that's not clear right now. They went through this
Yeah.
phase of like trying to acquire Meerkat and go into video
Oh yeah.
and
Go
maybe go into
live.
plus
Yeah.
stories, go live, and then they went to Twitter. It's what's
That's true.
happening, right? Uh, I
Clubhouse.
think a Twitter that is a little bit of Reddit and a little bit of Discord will kill it, right?
Yeah.
Creating communities and managing that. Number one. Number two, so strategy super important, but I feel like if this guy can figure out going to space and building an efficient car that's better than any other car that's been built before, right? I think he can figure out how news will work, right? The second
Well,
bit
yeah.
is like operating profits and operating margins, right? And just like completely killing it with how they do like cutting costs. And then third bit is how do you generate revenues? And this is the part I think is going to be really interesting because going back to our Netflix story, I think ads is in the way for Twitter. I think
Mm.
I think Twitter trying to sell ads is a bit weird because it's not about people don't go there to consume content the way they do on Instagram and Facebook, and
Yeah.
having those
Correct.
ads are just weird. However, if you force people who build follower bases that are really huge to pay to become, because right now they charge you 2.99 for the blue tick. It's a joke, right? Why wouldn't Donald Trump pay enterprise SaaS prices to have an ability to manage
Demand
his
that.
community a bit better, right? So I think
Yeah.
Twitter could transform in a model where they charge
Interesting.
people with communities as a community management platform and then build out tools for community management outside of Twitter itself.
And yeah, that would clean up a lot of the current complaints about Twitter with the bots, the how people are using it to cancel, right? Like it just once people have to pay, that does probably solve a huge part of it. The other thing that I did like though was
No, but not consumers
he
pay,
like
huh? The people who are
yeah,
paying
correct, yeah,
customers. Yeah,
enterprise, yeah,
yeah,
yeah.
So
yeah.
But like the other thing I liked was that he's in line with his general principles from his other companies like Tesla. Like his IP is actually open sourced, right? from Tesla, and he's going to do the same thing. He'll open source the actual algorithms, which are, again, right now that's like the main reason why we're having all these quote unquote problems with free speech or hate and all this kind of other stuff. And maybe combined with what you say plus the open source, it does lead to unlocking more value. What I don't know how that value kind of manifests. Like, is that for the existing base? Does that lead to further user acquisition? But based off the numbers that we talked about in terms of actual user base, it's still far from like this mass globalized platform like Facebook. So far from it.
I don't
So
think it has to
it,
be. It takes over.
it doesn't have to be.
It
Yeah.
doesn't have
Yeah.
to be. It doesn't have to be. And honestly, it doesn't even have to be. A, it doesn't have to be that big. B, ultimately, if you have a smaller business but your operating margins are better, then kill it, right? I think
Yeah.
first
Correct.
there's room to grow. I don't think it'll ever be as big, but then there's a massive space to grow in terms of like depth and then monetizing that, right?
Yeah.
So I just want to say
True.
two things very quickly. Number one is he's got to like figure out how it monetizes, and he has got to figure it out quick, because the way the acquisition happened is it's 2/3 backed on his
Oh
own
yeah.
asset and 1/3. So it's kind of weird. He didn't do a full leverage buyout. He could have done like 80% debt,
Correct.
but instead it's 1/3 debt, 2/3 his own assets, right? And I think the way it works is if the price drops, he's got to pay 40% to the dollar on his existing stock on Tesla,
Shit.
which means he's got to really make sure operating margins improve, so that they can immediately like pay back the debt, right? Which means I think there's going to be
Yeah.
massive layoffs on Twitter to begin with, right?
No choice.
Like I don't think it's just like 7,000 to 5. If I were him, like it's going to be like half or more, right?
Yeah. Correct.
I mean, just don't fire the site reliability engineers.
Yeah. Of course.
But like to start with, the second thing is, this is really interesting. People think he's taking it private, and I think it's not. Let me explain. There is a weird medium between a company being private and a company being public that Elon Musk has created. And that's the SpaceX model, right? So SpaceX looks private, but what happens is once every 6 months, stock in SpaceX is sold to a closed market of shareholders, right? So people are allowed to exchange hands at a predefined price controlled by SpaceX once every 6 months. And there's a decent amount of volume that gets transacted, right? And so
Yeah.
they've created this intermediary model of public private where he gets to control who buys and sells the stock of the company, at what price, and how that transaction happens, which is like almost unheard of for billion-dollar companies. But he's cracked that model for SpaceX, right?
Yeah.
Which means, and that when he wanted to take Tesla private, that was a plan. So him taking Twitter
Yeah.
private actually isn't doing this, right? It's a larger story here. Number one, he wants the Saudis out, right?
Yeah.
He wants the
Yeah. That
Saudis
was
out
my
in a big way.
understanding.
So I don't know if you guys know, but he was burned. The whole like taking. Have you guys been following the news? Like when he
Correct.
wanted to take
I saw
Tesla
that.
private,
Yeah.
yeah, he got burned by the Saudis, right? So this is his big fu to
Yeah.
the
Correct.
Saudis, saying like y'all don't like free speech. I'm gonna make sure free speech exists there by taking this company private, right? On the flip side, Tesla's largest shareholders are Chinese, right? which
Ooh.
means
Yeah.
which means now he's got to the other way around, which is like Twitter's banned in China. China may like I think they may make life difficult for Tesla if Twitter has any anti-Chinese sentiment, right? So he's got like that weird balance to play. But anyways, what I gist of the story is it's not fully private. I think he's going to be selling the stock in 6 months' time.
Does he end up fully owning 100% of Twitter? How does that work?
Yeah. His holding
Okay.
company will end up holding 100% Twitter.
Okay.
But that being said, I think in 6 months' time he will do the SpaceX model and sell some of that stock in a private market.
Andrew, question related to the notion we mentioned just now that zero budget is almost zero budget is allocated to Twitter, and I think we briefly touched upon the algorithm. Uh, I mean, I have a sense, I might be wrong, but how much does Twitter know about its users? Because most of the users would be passive or occasionally posting some comments. So you don't have the level of understanding that that Google or Facebook would have with its users. So you can't target the market.
In about 6 months' time, the level will be the same though.
So which
You know what? Sorry. Let me clarify. Do
yeah.
you know why I'm saying that? Because of first of all, Apple's changed its privacy settings globally, right?
Yeah.
But that's only 10% of the global market. Android's introducing the exact same policies in 6 months' time, which means in basically 6 to 9 months' time, Facebook is never going to have the same level of data it did in the past, and we're going to get shitty ads across every platform.
So
Unbundling of ads.
Sorry?
unbundling of ads, Alex said.
Exactly. exactly.
I was speaking with some friends who used to work at Twitter this morning, and I said, okay, what's the sentiment that you hear from your former colleagues who are still there? And the sense is that first, the, the ads team is really panicking because they know for sure that Elon Musk doesn't believe in ads, and will probably move to one kind of subscription model, and they're panicking because honestly, it has been pretty comfortable for them. So
Of
so
course, cushy.
so there's one choice for them is to go to TikTok, but many people are saying that TikTok is a Chinese company, life's too tough there, and they also have the choice of going to Facebook, but apparently, I mean, both Zuckerberg and what's the other one, Sandberg were villains, and the culture toxic. So basically, they're stuck in limbo, or as they say.
That's a completely different story, I guess. America is too fat, enjoying too much wealth, just skimming off the cream. So any final comments then, Andrew, to that, or can we wrap this up?
Yeah, I can close it and then we should wrap because I'm 2 minutes to the next call. But
Yeah.
I'm pretty excited about the acquisition actually. I think like what he's done is clean the slate in terms of investors. I do think he has his heart set in the right place, and he's
Of
got a
course,
big
yeah.
belief in terms of, and like a lot of people like, why don't you use that money for, for charity? I actually think free speech is one of those things that actually matter a lot, and creating a impartial news site that has the right kind of rules around it is actually really important. So I think he's doing the right thing here.
And
I think it's going to be really interesting. Sorry, go ahead.
it'll be really interesting
Bill Gates.
if Elon Musk acquires a charity organization and try to make it more efficient.
I think he will. Honestly, at this
Well,
level,
yeah.
I'm not surprised if he does that in a few years'
Well,
Yeah.
time.
well,
Why
well,
not just buy out the World Bank, right? After I
well.
did
He also gave a middle finger to Bill Gates because Bill Gates was shorting Tesla, and because then he said no to the pledge as well. So this is like
correct.
multiple FUs, I guess.
Yeah, I mean, I love having this like billionaire engineer at the top, right? Richest guy in the world who's able to make these decisions. I really hope he does get charitable in the future. But for now, I think this is like a pretty good move. I'm really excited to see like first monetize it.
Yeah.
Like operating cuts, very clear what he has to do. I mean, he just has to make some hard decisions. But the strategy and monetization model, and I guess in my head, I really want to see a weird Discord, Reddit, Twitter baby get born out of Twitter, and I hope that
Yes.
happens.
Yes.
And maybe Twitter will indeed become a Web3 company. Because there's so many things that could be
Yeah.
built into it.
Maybe
Yeah.
that would be a great legacy for Jack Dorsey. You know.
That's his internal project, right? His biggest priority project at Twitter was something called Project Blue, which is converting Twitter into a Web3 based app.
Yeah, man. He's the OG of it all. So.
Correct.
All right, guys. Great call. We'll let you guys move on to your next meetings. I think we had a great discussion, and we'll see you back here for the next episode.
Ciao,
Thanks.
guys.
Bye.
Bye bye.